Welcome to Lifetime's webinar series. I am here once again with Liz Coe, and we have got Martin Hawes, both financial experts who have formerly been financial advisors and advised a number of customers across New Zealand. Today, they are no longer financial advisors, so we will put a disclaimer in that the information given here is general and does not constitute as advice to any person. Lifetime Asset Management Limited is the issuer and manager of Lifetime Retirement Income Fund. For further information, go to lifetimeincome.co.nz for a product disclosure statement. I'll also note that Martin Hawes is a director of Lifetime and a shareholder. In terms of our disclaimers, we just want to make it really clear that Liz and Martin both do not hold financial advice licenses anymore. So this is all general discussions and not to a given person. So today we've got obviously Liz, who is the director and founder of Enrich Retirement, which they do a wide range of things on the website, from financial to lifestyle, to what else? Exercise, isn't it, Liz?
All sorts of things, everything related to retirement. Just go to enrichretirement.com and have a look and see what's there.
Fabulous. And Martin Hawes, who is a best-selling author, you would have known in the past that he did one on trusts. His most recent one, Cracking Open the Nest Egg, which was published last year, is it's a vital Bible for when you're coming into retirement. Where can you get that book, Martin?
I think just any so-called good bookshop, but that good bookshop is likely to be online now, and I think it's available under Kindle, in Kindle format, and I must check that.
Fabulous. And I'm Chelsea from Lifetime Retirement Income. We specialise in retirement income solutions. So if you're planning your retirement, or if you are in retirement, it's never too late to work out your retirement income solutions. You can design one for you, and it's quick and easy. Today, our topic is going to be on Cyclone Gabrielle. It's been around about a month since Cyclone Gabrielle hit, and she came hot on the heels of Cyclone Hale and all the flooding up in Auckland. So it's fair to say it was a wet February. For those that lived in the affected areas, a lot of them are still dealing with it today. And it's a hard situation. We recognise that. You know, there's a lot of people that have lost everything and are dealing with insurance companies. Today, we're going to have a look at what the effect is on New Zealand as economy, the economy, and the impacts it could have in the future. However, to those that have been affected, we are deeply sorry that it has happened. And we all remember what happened with Christchurch, and we understand it's a long road to recovery, and that there will be a big tidy up, which unfortunately continues even when the media stops reporting on it. So we're going to dive into it and start with kind of the big question is how do we anticipate this is going to affect New Zealand? I suspect there's some early signs that are happening today, but, you know, obviously, Martin, you'll have experience across what happened in Christchurch, having lived around that area. What are the early signs of what's going to happen to the New Zealand economy, and then the longer term signs?
I suspect and I hope that this will be smaller than Christchurch was in financial terms. It won't be smaller if you're on the ground there, and I do extend my sympathy to people who've been, many of them so badly affected. I think Christchurch is in some ways is not a bad model, even though it's probably smaller. I think one of the good things is that this should come as a warning to us in terms of the cost of climate change, and that's going to be huge. So put aside that it's going to get too hot and that we're going to have more storms, we are going to have to mitigate these kinds of things. Now, I'm sitting here right now as I speak at my home, which is about 1 metre or half a metre above sea level. So, the waves are literally, I'm just looking out the window, they wouldn't be 70 metres away. And at some point, and it may be 100 years away, so I won't see it, I don't know, but at some point, governments and local bodies are going to have to say, you can't build there, or you can't be there even. I think the good side of this is that it's a shot across our bow in terms of a warning, and that I hope that councils in particular will take it really seriously in terms of what they allow and where they allow it. If you take Christchurch as a model, and although I didn't live here at the time of the Christchurch earthquake, so I was down the road in Queenstown. All my family lived here, and I had and a lot of my friends had a fair bit of experience with it. There were winners and there were losers, and that was really large for me. Those who weren't, there are some obvious losers, those who weren't insured, people who couldn't get insurance for various stuff. And I'm thinking of what's going on in say, in the East Coast and Gisborne at the moment, where there are huge amounts of silt. I presume, I don't know this, but maybe people aren't insured for that. Maybe some of their fences aren't insured. If you've got to completely redo your fencing, the plain mess of the place must be, may not be able to be insured. Other people, there will be people on the winner's side who will pick up their insurance check. It would be more than what they were ever going to get if they had simply sold the property, whether the property's a farm or a house. It sort of doesn't matter. And they can take the cash and they can run. And there were certainly plenty of people around in Christchurch who were delighted actually that their building was no longer serviceable and that they now had a lot more money than, it was insured for a lot more money than they were ever going to get. So winners and losers, winners and losers. A lot of the insurance stuff, we have to remember, will be reinsured or underwritten by companies outside of New Zealand. So one of the things that happened around Christchurch was there was something of an upward blip in the exchange rate as that money came into New Zealand from the Swiss or the New York underwriters or reinsurance companies. I don't know that this is going to be big enough, but there will be economic effects like that. I would imagine that if you take a place like Gisborne, it's probably now very hard to get accommodation of any sort. Those who have rental properties would be winners. Those who have accommodation are probably winners. Here in Christchurch, there was a flood of consultants and engineers and people like that, who town planners and so forth, who came into Christchurch to give advice, and it was pretty hard to get a night's accommodation. Of course, some of the hotels had fallen over anyway. So there'll be all sorts of things like that. I do hope that eventually this is cleaned up and the vast majority of people will be able to do what they did again, but hopefully not without some mitigation or some relief of what happened. Final thing to say is I always remember my parents going on about Mount Etna, the volcano in Italy, would go off fairly regularly. All the houses on the flanks of Mount Etna would get obliterated, but soon enough people would go back and build back in exactly the same place. We're going to have to do things differently, and that's going to cost.
It's interesting you say that, because I saw a report that fundamentally said it takes 7 years for people to forget what happened on that land and to go back. And whilst the house values around that area will decline, after 7 years, it's back to what it was. So it's an interesting concept of how the human brain works. Liz, in terms of, obviously, you and I both live in the Wellington area. lettuce, bagged lettuce was not available on the shelves after Cyclone Gabrielle. So for, that was one of the implications that we saw quite early on. I also wonder, and particularly not just Cyclone Gabrielle, but the floods up in Auckland, we had all these cars that were fundamentally written off, and I'm assuming are insured, which means we're going to get a whole lot of new cars on the road or payouts, money coming into the economy in a time where Adrian all wants us to stop spending money. How does this impact inflation if we're bringing in a whole lot of money, buying a lot of new stuff when they're trying to bring inflation down?
Really good question. So I think we need to distinguish here between the short-term effects and the longer-term effects of this event. So in the short term, we're going to see a massive hit in terms of our production. So we're just in the early stages of seeing our GDP fall, which is the result of all that hard work by the Reserve Bank, pushing up interest rates. They wanted to curb inflation and slow down the economy. So we're starting to see the benefits of that hard work now, with GDP starting to drop off. So I think with this kind of event, the initial thing is, you can't buy lettuces, things that are in short supply because, Watties was caught up in the cyclone. So yes, lots of production, which will have a negative impact on GDP, which is kind of what the government was aiming to do. But in the longer term, yes, you've got that money pouring in from the reinsurance companies, from the government, bailing out people, providing support, reconstructing roads and bridges and that kind of thing. So that's going to definitely add to our inflationary pressures. Look, all that construction going on, there's going to be yet again shortages of building materials. Maybe it's now another good time to invest in jib board or something, I don't know, because that's going to put huge pressure. And also just in terms of the labour force requirements, the people that are going to be diverted. So there's a huge resource diversion towards the Hawke's Bay area, which is going to impact on other areas in New Zealand, leaving shortages of materials and labour. So it'll be interesting to see how this plays out with, initially that negative impact on GDP, but then higher inflation and that the positive, growth in GDP as a result of all that construction activity. So it's really just prolonging some of the experiences that we've had already through COVID and testing our systems yet again. So I think, we have to be prepared for that. It'll be interesting to see what happens with the Reserve Bank, their moves on the OCR. We are seeing, however, a drop in wholesale rates for banks, and I think we have to remember at this time that we're part of the global banking system in that regard. So the interest rates that banks offer to retail customers are not just dependent on the OCR, but also on what's happening around the world. So makes it a little bit more complicated to kind of predict how that's going to play out. So we've got a whole lot of forces, interacting here that have, in some sense, opposing effects. So it'd be interesting to just see how it does play out.
Do you just want to take a second to explain wholesale rates to everyone?
Well, so when banks are looking for funding, they borrow from mums and dads, people like you and me. We put deposits into the bank, and that's one source of funding. But they can also borrow from, the wholesale markets, the interbank markets, and so on, which is, so that also provides the money for them to be able to lend on mortgages and so on. As Martin said, I think in another webinar that we did just recently, the banks tend to kind of borrow short and lend long. So they're looking at taking money from retail investors, which might just be short-term money, but then they need access to longer term funds as well, and they will borrow from wherever they can to and then add on a margin to increase the level of lending activity that they can undertake. So yeah, so there's lots of different contributing factors to what makes up a retail banking rate.
And Martin, have you got any thoughts on kind of the prolonged inflation that we will probably start to feel?
No, it's very hard to say because we don't know how much rebuilding and rebuilding there is going to be there. I mean, it's going to have an inflationary effect. That's for sure. Adrian Orr and his team have got a lot of things to balance at the moment. They've got the banking crisis, they've got the underlying inflation. A lot of it driven out of the war in Ukraine, but some of it driven internally as well. And now they've got this on top of it, and Liz is right that the builders and so forth will be building costs are already extremely expensive, but they may become more expensive simply because resource goes to. There's a few building companies being reported in trouble at the moment, and they may get plenty of work out of this.
So we've got the effects on kind of New Zealand nationwide. What do we see the future effects on kind of the individual in terms of what we can see coming down the line for you, me, other than not being able to buy lettuce at the supermarket?
Yeah, it's the least of our worries, really. I think it's preparedness for this kind of thing that we need to think about, because whether it's a weather event or whether it is, God help us, an earthquake, or whether it's some other, thing like a major biosecurity breach, a foot-and-mouth disease, we have to have our finances ready for this. And I suppose two or three things. The first of all, I would have of my investments, I do have a fair chunk of that invested internationally, not just in Australia, because if something happens to New Zealand, the same thing might have happened to Australia. But I have a fair wad of my investments invested in international shares. So this is stuff mostly, but not exclusively, in the US, some in Europe, some in the UK, but mostly in the US. So if, say, foot and mouth happened, or the big earthquake happened, or another huge weather event like this that was much more widespread, then I've got money invested internationally. Second is I would encourage people to hold a bit of cash, and by that I mean to hold some short-term bank deposits, because you never know when something like this is going to hit and actually take your income with it, and then you don't know how long you might be without that income. It could be weeks, it could be months, depending on what it is happening. To have your house ready, I've got candles here. I've had candles. I think I bought them about 15 years ago. I hope they're still okay. To have a bit of water on hand. One of the things that could happen to me here is tsunami. So, I've got to have a pack ready to. There's a hill close by, a very high hill, so get away, but to have that sort of readiness. Have a little bit of, I talk about holding some cash, and I'm meaning some short-term bank deposits, but have a little bit of actually folding stuff, actual money, because one of the things that happened in Christchurch, not for very long, but EFTPOS went down, I think, over the whole city, but certainly in some areas, you couldn't so much as buy petrol. And, a lot of people I know in Christchurch, and I try to do it as well. I try to make sure that I fill the car up when it's half full rather than when it's dead empty. So I don't want a dead empty car sitting in the garage, and I've got to go somewhere in emergency. So some of those things are really well laid out. But I think that this happening should be a spur for you to go and actually do it.
I think, just adding to that, Martin, a really good idea is to sit down and do a little thinking exercise around what if it was me that was caught up in that cyclone? What would I be feeling right now? And what would I be wishing I had done in advance to prepare for this moment? And, I mean, your heart really goes out to those people who, many of whom are, about our age, and their whole life work is gone. So you've got to think about, well, what would I do? Have I got enough insurance cover? What would be the first things that I would take in an emergency? Where do I keep all my key documents? Things like insurance policies. It's all very well to, have insurance, but you need to be able to get your hands on those details quite quickly. So where do you keep all your key documents? And how would you rebuild from something like that? So, absolutely making sure you have a sufficient insurance cover. And we know that every time there's a disaster, it uncovers people who have not got adequate insurance. And it just really is so important, particularly when you get towards the later stages of life and you don't have that opportunity to rebuild your assets again. So, if you're in a situation where something terrible happened to your home, would you be able to rebuild and still have an adequate lifestyle? There are online services that allow you to store important information. There's one that I'm aware of called My Trove. It's mytrove.co.nz. You can go in there and lodge all the details of your important documents, and I think that's a really useful service to have somewhere in the cloud that you can store this information so you can access it. It's not just in physical form, because bits of paper can be destroyed in a big event. And I guess the other thing too is thinking about where you live. And we've all had this retirement dream. Some of us have. Well, I live next to the sea, just as Martin does. That was my retirement dream, to go and live by the sea. And I can also look out the window and see the waves crashing on the shore, which is nice but scary at the same time. So those retirement dreams of living near the seaside or by a lake or by a river, for safety reasons, you might want to rethink that, or at least have a plan B, have an alternative residence somewhere as well, because your climate change is happening whether we like it or not. And you can debate the reasons. You can say, well, it's man-made, these effects on the climate, or you can, take the alternative view, and that is just part of a natural cycle. But whatever the cause, we are definitely seeing huge shifts in our climate now. And I guess, as a councillor on the local Kapiti Coast District Council, we're having these conversations right now around, how do we prepare in our district here, which is quite coastal in its nature, how do we prepare for climate change, and looking at our emergency management systems, that kind of thing. So you do have, it is a big wake-up call, thinking about, well, if it happened to me, how would I be? What would I wish I had put in place beforehand, or what do I wish I had on hand that would be useful to survive the situation?
I think it's also important to look at it as not just a cyclone. This could be an earthquake, it could be a number of events that are caused. And I remember listening to Radio New Zealand late last year, and Kerry McAnulty, who had just become the Minister for Civil Defence, and he was promoting people relook at their emergency supplies, because after COVID, a lot of people utilised those supplies during COVID, particularly in the early days, and never actually restocked.
Mm-hmm.
So you do need to look at it every year. Maybe do it as, I know we talk about it a lot, Martin, when you redo your will at Christmas, you should redo your supplies, make sure that you've got everything there. And reiterating your point around having cash, I think Gisborne needed to use cash for about a week, up to a week, maybe a little bit longer, I think. So it's a reminder that you do need some cash. It's a really important part of your civil defence pack.
One of the things I always think, Chelsea, is that if I'm in good enough shape, if I'm prepared, and I've got, you know, a little bit of food, and I've got candles and whatever, I'm then in a position where I can help other people. And I can't do that if I'm struggling with my own existence.
Yeah, yeah. I think that's important. And you mentioned earlier, Martin, around short-term term deposit. How short are we talking? Are we talking the year or 6 months or 3 month bank deposits? Or
Probably 3 months, depending on the normal thing that advisors say is that you should have about 3 months of money, of cash in the bank and on deposit, to about 3 months equivalent spending. So you can keep going for 3 months. If you lost your job out of this disaster, or you lost your business, then you'd be okay for 3 months. Retired people should, I think, have a year or even 2 years of cash. That's equivalent as spending. And I would have that in either laddered term deposits, that is deposits, some on 1 month, some on 2 months, some on 3 months, or some kind of high interest savings account, and they do exist.
can we also go back to insurance, because there are a lot of retirees as well, and a lot of New Zealanders rent today. And I think a lot of people miss the fact that the importance of contents insurance. Could one of you guys just talk to why contents insurance is so important?
Well, I mean, it goes without saying that, if you need to set up your household again, even if if you're renting, if your whole house gets inundated with water, fire, covered in dust from an earthquake or whatever, you need to be able to replace that. So again, I always think with insurance, the what if question is the most important question. You say, what if? What if something happened where all my possessions were damaged? What would I need in order to rebuild my life again? And try and quantify that in some way. And that will give you an indication of how much insurance cover you need. So it's not about, going around and counting every teaspoon you've got and putting a value on it. It's about making a list of, what are the basics that I would need to start my life over again. And, making sure that you'd be able to have enough money to cover that off. Just a really important question. And I know there's huge financial pressures on people, especially people who are renting in retirement. And unfortunately, insurance is one of those things that kind of gets dropped off the list because, you're more concerned about food and heating and transport, and people try and cut corners on their insurance payments, insurance premiums. And it's not a good idea to do that. You have to have at least some basic cover in place to avoid being in a disastrous situation.
You got anything to add there, Martin?
No, not really. I'm just, as we're talking, casting my eye around and thinking, what would it cost if I had to replace all or at least most of this? And I think I've got a couple of hundred of contents, a couple of 100,000 of contents insurance. It may not be quite that much. I can't remember just offhand, but it would be expensive redoing this.
Look, I think the other thing to bear in mind as we're talking about all this is that we have, financial resilience that we need to be concerned about, but there's also personal resilience. And we have to also remember that we're part of a community. And, what you see in these situations, such as in the Hawke's Bay, is there is a whole community that gets around and works together. And I think it's really important as you go through life is to keep up those community networks so that you have other people that you can rely on or you call upon for support if you need to. And so often in retirement, people get more and more isolated. That's not a good thing at times like this. You need to have people around you who can call in and check up on you and say, how are you? Did you survive this disaster okay? Or what can I do to help you? So, maintaining those community links is, extremely important at times like this. And I know that's very much part of, certainly on the Kapiti Coast District Council, we're doing a lot of things within our community now to build that community resilience. And, for example, we just on the weekend, we had a big initiative called Over the Fence Kapa, where people were encouraged in their local neighbourhoods to just get together and have a cup of tea with their neighbours. And I think that's a fantastic idea, so that you get to know people and you can swap phone numbers or emails, and then you know that there are people around who can just check up on you to see if you're all right.
And I think it's important to ask for help. Don't feel like you're a burden on someone by asking for help, particularly in these types of situations. And the other thing I think is, you kind of look around and look at your own space and you think about what could happen within where you live. And we've got to remember we had a tornado that ripped the roof off a person's house in Waihi Beach around the same time as Cyclone Gabrielle. So I don't think anyone's immune to something happening. There's a possibility wherever you live of something affecting, whether it be something that's climate change related, to natural disasters such as earthquakes. We've had volcanic eruptions here as well. So, we're in New Zealand, there's a lot of things. So don't think that you live in a safe zone. Everyone's got something that could hit. And it's about being prepared, like you say, have the contents insurance, have the insurance. It's really hard to rebuild. Our hearts go out to all those people that have to start doing that at the moment, and looking at what they will be doing. Is there anything else you guys want to add on the subject matter? Or?
Look, I think the motto is just, the old scouting motto, isn't it? Be prepared.
Yeah, definitely be prepared.
Yeah.
Well, I think we'll wrap that one up for today. Thank you again, Liz and Martin, for joining us. And again, this was brought to you by Lifetime Retirement Income, which are your retirement income solutions. We have a number of solutions available on our website. Please do check it out. And later this year, we will be launching a new one, which will be looking at releasing equity from your home to generate a retirement income, which we're very excited about. So watch this space and keep coming back here to learn about it. Thank you very much. And thank you, Liz and Martin.